Hello and welcome to 3.0 TV. I am Vishakha Thakur and you are watching the Coin Monitor. Virtual digital assets or VDA remained range-bound despite benefiting from a weaker dollar after some relatively softer consumer inflation readings for April. Bitcoin, the largest crypto by market cap, hovered around $66,000 levels. IC15 index of cryptocurrencies was trading up by 0.5% at 82,000 points. Interestingly, Bitcoin rebounded on Wednesday after sinking as low as $60,000 earlier this week. The rebound was fueled largely by a slide in the dollar, which hit one-month low after some softer consumer price index readings for April. Furthermore, headline CPI grew at a slower than expected pace while core CPI eased as expected. The readings, which were accompanied by a weaker than expected retail sales data, pushed up some hopes that inflation will ease in the coming months and give Federal Reserve more confidence to begin trimming interest rates. Interestingly, the Chicago Mercantile Exchange, world's largest futures Bitcoin trading platform, is set to introduce spot BTC trading in response to increasing demand from Wall Street investors. CME is in discussion with crypto traders to establish a regulated marketplace for spot BTC trading, expected to operate through EBS, a Swiss currency trading platform known for its strict regulations on crypto asset trading. Furthermore, India's Securities and Exchange Board of India (SEBI) has recommended multiple regulators to oversee crypto trade nationwide, contrasting the Reserve Bank of India's tightened grip on cryptocurrencies since 2017. Well, the decision has gained traction among Indian crypto market participants. The global crypto market cap was at $2.4 trillion mark, increasing 0.5% in the last 24 hours. The total trading volume decreased by 18% to $80 billion. Separately, inflation still remained well above the central bank's annual 2% target range. A slew of Fed officials also warned in recent weeks that the bank will need much more confidence to begin trimming rates. This notion limited any major gains in Bitcoin, keeping the token trading comfortably within a $60,000 to $70,000 trading range established over the past 2 months. Increased risk appetite, which was reflected in Wall Street hitting record highs, also did not spill over into crypto. The prospect of regulatory headwinds bode poorly for crypto markets, especially as recent reports suggested the Securities and Exchange Commission was mobilizing more regulatory action against the sector. Moving on, Shiba Swap, a decentralized exchange for the Shiba Inu community, is now live on the Shibarium blockchain, allowing users to introduce new liquidity pools and enhance multi-chain operations. Now, this move signifies a significant milestone for the Shiba Nation as it brings sophistication to multi-chain operations on Shibarium and Ethereum. Moreover, Arbitrum addresses reached an all-time high in May due to new users using its DeFi and NFT offers. The network is now among top layer 2 solutions for Ethereum, offering faster and clearer smart contracts for messages and activities between layer 1 and layer 2 addresses. The growth of Arbitrum is attributed to developers using it as a basis for their decentralized apps. US stock futures traded flat. Dow Jones Industrial Average topped the key 40,000 level for the first time in the previous session. Futures tied to Dow Jones Industrial Average traded flat, as were S&P 500 futures and Nasdaq 100 futures. Bitcoin was trading at $66,200, up by 0.1%. Ethereum, the second largest crypto, was up 1%, trading at $3,025. Next on the list, Solana Sol was up 3% and was trading at $166. While Cardano's ADA token was up by 7% to trade at $0.48. Talking about Avalanche's AVAX token, it was trading at $36, higher by 6%. Next on the list, Polygon Matic was trading up by 4% to trade at $0.70. Simultaneously, Ripple's XRP token traded at $0.52, up by 0.5%. Polkadot was up by 4.5% to trade at $7.2. However, Binance's BNB was down by 0.5% to trade at $576. In Doge, the popular meme coin was trading down by 2% at $0.15, while Shiba Inu was trading down by 2.5%. So that's all in the Coin Monitor. This is me, Vishakha Thakur, signing off. For more on such updates and market news, please log on to our website www.3versetv.io or scan the QR code. The Chicago Mercantile Exchange, world's largest futures Bitcoin trading platform, is set to introduce spot BTC trading in response to increasing demand from Wall Street investors. CME is in discussions with crypto traders to establish a regulated marketplace for spot Bitcoin trading, expected to operate through EBS, a Swiss currency trading platform known for its strict regulations on crypto asset trading. The introduction of spot BTC trading on CME would enable traders to engage in basis trades, a strategy that aims to profit from the small price discrepancies between futures contracts and the underlying spot BTC. This development comes after the US SEC approval of spot Bitcoin ETFs in Jan, signaling the growing acceptance and integration of digital assets into traditional financial markets. As of March 31st, 937 professional firms were invested in US spot ETFs compared to just 95 professional firms invested in gold ETFs during this first quarter. CME's entry into spot Bitcoin trading could present significant competition for Binance, the largest crypto exchange by trading volume, which currently faces regulatory scrutiny worldwide. Over 600 professional investment firms have reported significant investments in spot Bitcoin exchange-traded funds in their 13F filings with the US SEC. According to the filing data on May 9, professional investment firms own $3.5 billion worth of Bitcoin ETFs. Morgan Stanley, JP Morgan, Wells Fargo, UBS, BNP Paribas, Royal Bank of Canada, and hedge funds like Millennium Management and Schonfeld Strategic Advisors were among the top investors. Millennium is the largest BTC ETF investor with $1.9 billion invested. Now, other top investors include BlackRock's iShares Bitcoin Trust, Fidelity's Wise Origin Bitcoin Fund, Grayscale Bitcoin Trust, ARK 21 Shares Bitcoin ETF, and Bitwise Bitcoin ETF. Schonfeld Strategic Advisors, a hedge fund with $13 billion in assets under management, was the second largest spot BTC ETF investor with $248 million investment in BlackRock's ETF and $231.8 million investment in Fidelity's fund, totaling $479 million. Now, other top investors include Bow Bay Fund Management, Pine Ridge Advisors, Morgan Stanley, Aristia Capital, Graham Capital Management. Despite the recent slump in inflows, hundreds of financial institutions have revealed billions of dollars invested in spot BTC ETFs. Blockchain security researchers from Binance have developed an algorithm to detect poisoned crypto addresses on the BNB Smart Chain and Ethereum networks. Address poisoning is a scamming method where the threat actor sends small amounts of crypto from an address that resembles a victim's address, misleading the user to use the fake address for transactions. Now, this attack preys on users' carelessness as they may overlook subtle differences in addresses. A recent incident of address poisoning led to the loss of $71 million worth of wrapped Bitcoin, raising concerns about the prevalence and scale of damage caused by such methods. Binance's algorithm identifies spoofed addresses by detecting suspicious transfers, pairing them with potential victim addresses and time-stamping malicious transactions. The spoofed addresses are registered in the database of Web3 security firm Hashdit, Binance's security partner, to protect the wider crypto industry from these scams. Address poisoning scams are difficult to detect due to traders only verifying the first and last digit of wallets. 42 alphanumeric characters, and most protocols only display these digits.